This video is about the Balance Incomes tool in Family Law software. You get to this tool by clicking the Negotiate tab and then selecting Balance Incomes. This tool helps you find a sensible and fair spousal maintenance amount by looking at each party's share of their combined after-tax income. Let's see how it works. We'll start here with this group, Desired Percent and Spousal Maintenance Needed. This is where all the action occurs. You enter a desired percent of income after taxes and spousal maintenance to each party. A typical number to enter is 50%, so that each party ends up with half of the combined pot of income after taxes. And instantly you see the result, the spousal maintenance that would need to be paid in order to have the parties achieve that target. In this case, it is $1,462 payable to Pat. Now let's look at the details. So this chart shows the calculation of each party's annual after-tax income. Let's see how it works. We start on line 1 with income, and then on lines 2 and 3 we subtract or add, as appropriate, the child support and spousal maintenance. That gives us, on line 4, income after support and maintenance. Then we subtract each party's taxes. That gives us income after child support, spousal support, and taxes. You'll notice in this case that Pat's taxes are negative. That means that, on balance, the government is giving Pat a subsidy, probably composed of the earned income credit and the child tax credit. And you'll see that the way spousal maintenance has been set, the income after taxes of the two parties is essentially identical. That's what the calculator achieves. Now let's look at the expanded report. This is a report that is in a format popularized by a program known as Finplan, which is still popular in some areas. It shows the same calculation and the same results, just in more detail. Now let's look at the options that you have with this calculator. This link here allows you to enter or change actual spousal maintenance. So I can change the actual maintenance to be the number that I calculated. The next option allows me to calculate as if there is no child support, as if the only support is spousal support. In Illinois and Connecticut, this is known as unallocated support, and in California, this is known as family support. This was a common practice when spousal support was tax deductible. And what it did was to allow a greater tax deduction because all the support was characterized as spousal support and none of it was characterized as child support. This probably violated the federal tax statute around spousal support, but people did it anyway. In any event, it is much less relevant now that spousal support typically is not deductible. This option specifies whether we should keep child support in sync with spousal maintenance. It is relevant in states where child support depends on spousal maintenance of the current relationship. And what this does is it says, as we are changing spousal support, we should change child support at the same time, the same way that child support would change if spousal support were set at the new level. And the software does the calculation, which changes both at the same time and ends up at the combined total, which makes after-tax cash equal or divided in whatever percent you specify for both parties. Typically, if you see this box, you would want it to be checked. But if you know what child support is and you just want to vary spousal support, you would clear this checkbox. The next option specifies that we should calculate the amount of spousal maintenance that is required to achieve our target after taxes and living expenses. This is much less common. You would do it in a situation in which most likely the parties were mediating and wanted to equalize their net cash after not only taxes but all living expenses were accounted for. And we see that in this case, when we check that box, no spousal maintenance would be necessary to be paid. The next checkbox, omit taxable capital gain from any sale of real estate, is one you would always want to check. To the extent that taxes are a factor in this calculation, You want to exclude the impact on taxes of any unusual, extraordinary event. And the sale of real estate could be such an event. And the last checkbox relates to the display. Do we want to display living expenses and income after living expenses? So now when we go to the details, we will see and another line for net after taxes and living expenses. You would want to do this if you had entered living expenses for both parties that you felt were valid and realistic, and you wanted to see what the net incomes of the parties were going to be given the alimony that was calculated after all living expenses, including mortgage, healthcare, childcare, and so on. Now we have looked at only one scenario. We can click this button to show another column, and we can see what the maintenance needed would be if the desired percent of income to Pat were 40%, and what the maintenance would be if the desired income to Pat were 60%, and any other numbers we wish. So the Balance Incomes tool is a great tool to very quickly figure out what spousal maintenance needs to be in order to get both parties to a share of after-tax cash that you specify. Thanks for watching.